For decades, if you wanted to understand East Africa's commercial power, you started in Nairobi. Kenya built a deep banking system, a powerful private sector, and commercial networks stretching across the entire East African community. Yet, Fitch's sovereign ratings are sending a contradictory signal. Fitch currently rates Tanzania's sovereign creditworthiness above Kenya's, B minus plus, with a positive outlook, compared with Kenya at B minus with a stable outlook. Right now, the answer seems obvious. But the deeper we follow the money, the infrastructure, and the trade routes, the harder that answer becomes to defend. Because Tanzania doesn't need to overtake Kenya as a country, it needs to challenge Nairobi's role as East Africa's indispensable gateway. So here is the real question driving this story. Can Tanzania replace Kenya? To understand why this is happening, we have to clear up a massive misconception about what rating agencies actually measure. A sovereign credit rating measures the government's ability to meet its financial obligations. It does not measure which city has the deepest banks, the strongest technology sector, or the largest concentration of regional headquarters. And that distinction is the key to this entire story. Kenya's private sector remains a regional titan. The paradox is that Nairobi can remain the region's financial hub, while the Kenyan treasury struggles with high domestic interest costs and debt servicing pressures. That fiscal pressure is one of the factors weighing on Kenya's B-minus sovereign rating, but it raises a deeper question. If the Kenyan state's balance sheet is under pressure, what is happening south of the border? Look at what is changing south of the border. Tanzania's sovereign position is improving, its reserves are strengthening, and its investment in energy, minerals, and logistics is accelerating. Fitch projects Tanzania's public debt to decline from roughly 48.9% of GDP down toward 46.2% by 2028. That improving position rests on three underlying forces: energy, minerals, and logistics. First, energy capacity, dramatically expanding electricity generation through projects like the Julius Nyerere hydropower project. Second, mineral wealth converted into reserves. By July 2026, the Bank of Tanzania reported that it had purchased roughly 28 tons of gold over an 18-month period, valued at roughly $3.7 billion. The significance is bigger than the number itself. Tanzania is turning part of its mineral wealth into a stronger external financial buffer. And third, corridors and logistics. Together, these developments help explain why Tanzania's sovereign position is improving. But they also point towards something much bigger, an alternative economic system taking shape. Which brings us to our second question. Can Dar replace Mombasa? For years, Mombasa gave Kenya massive geographic leverage over the trade of landlocked East Africa. But leverage becomes less powerful when customers have alternatives. Tanzania is upgrading the Central Corridor, the Dar es Salaam-based trade route, serving Tanzania, Zambia, Rwanda, Burundi, Uganda, and Eastern DRC. The significance isn't that Dar es Salaam has already replaced Mombasa. It hasn't. The significance is that landlocked economies increasingly have another route to consider. That does not mean cargo is suddenly abandoning Mombasa. It means the region has more than one strategic option. And in geopolitics, an alternative route can be more powerful than a replacement route. Because you don't have to abandon Mombasa to weaken its leverage. You only need another option. So, is Tanzania actually winning the race for regional influence? Not quite, because Tanzania has run straight into a hard structural wall. Tanzania can build a port, it can build a railway, it can build a dam, but it cannot manufacture decades of accumulated financial relationships overnight. Kenyan banks, insurers, telecom companies, professional services firms, and multinational headquarters have spent decades building regional networks from Nairobi. That is the moat Tanzania cannot build simply by pouring concrete. Which brings us to the next big question. Can Tanzania replicate Nairobi's ecosystem? This is where Tanzania's challenge becomes much harder, because ports and power plants are physical assets. Nairobi's advantage is something much harder to build: a network. The reality is stark. Infrastructure can be built in years. Ecosystems take decades. Investors looking for a regional operational base still run into the gravitational pull of Kenya's private sector. Kenya built the network. Tanzania is building the alternatives. Kenya's private sector moat is immense. But as alternative corridors develop, governments and businesses gain something economically valuable: redundancy. Redundancy has economic value. A shipper with two viable corridors has bargaining power that a shipper with one does not. A government with two supply routes has leverage that a government dependent on one does not. You don't need to abandon Nairobi to benefit from another route. You simply need another option when costs, congestion, financing, or politics change. And that is where Tanzania's rise becomes strategically important. It doesn't have to defeat Kenya's ecosystem. It only has to reduce the region's dependence on it. Zoom out across the entire East African community, and you realize something fundamental has shifted. We are no longer looking at a single hub economy. We are looking at a multipolar region with four distinct models: Kenya, finance, technology, and regional services; Tanzania, energy, mining, ports, and heavy logistics; Uganda, oil development, agriculture, and inland trade; Rwanda, services, logistics, tourism, and specialized exports. Which brings us to our final question. Does Tanzania even need to beat Kenya? Let's look at the other side of the ledger. Rating agencies like Fitch continue to flag Tanzania's structural vulnerabilities: weak government revenue relative to peers, limited institutional capacity, and low per capita income. Its improved policy framework still needs to prove itself under major external shocks. Tanzania has momentum. It does not yet have dominance. So can Tanzania replace Kenya? No. And that may be the wrong question. Because the real shift isn't that Tanzania is becoming the new Nairobi. It's that East Africa may no longer need one city to be the new Nairobi. So what do you think? Is Tanzania actually catching Kenya? Or is East Africa simply becoming more multipolar? Let me know in the comments. And subscribe to Blueprint Africa for more deep dives into Africa's infrastructure, economics, and geopolitics.